All right, good morning. Wednesday, another wonderful Wednesday, October 15th, Zach Howard here. Morning market update, follow up from yesterday's. Look through the disinflationary pressures potentially as the macro regime potentially shifts here in Q4. Gold, all-time highs, not much more you can say about it. Every single day, it just wants to go higher. I've been studying gold for 7, 8 years. This is just unbelievable. But remember, it's not that gold is going up every single day. It's that the fiat is going down and all currencies. But round number here today, 4,200 US dollar an ounce. Think back to the gold miners, the business model. You build out your business where you're operational, profitable on 1,800 US dollar ounce gold. Everything else lays the same. Labor costs kind of creep up a bit. Your infrastructure is already built, already paid for, and you got 4,200 ounce gold. Massive free cash flow, like 60, 70% free cash flow yield. That is not possible in any other sector right now. Like I said yesterday, this is higher free cash flow per dollar of revenue than you're even seeing in the tech space, in that semi, in the AI. DC creep will kill you in investing if you don't adjust your biases. Gold is a real business here. Silver is a real business here. It is smoking it. And I don't see the backdrop where it's going to change the long-term trend here. Fiat's dying. Yeah, like it's going to be a pullback. It's crazy overbought. RSI, relative strength index. People use that shit. I don't. It's like 95 or something on gold here now. But if anything pulls back below 3,900, the physical buyers that's really moving the market is going to step in and buy it. And then to the same point, silver 52.50 an ounce. Let's look at the macro though. Like the oil is really adding to the cash flow ability to these companies here. Their biggest input cost outside of labor is your energy cost, your diesel. I talked about yesterday. And for that setup for the U.S. consumer as well, those people part of the economy that don't own assets, the most vulnerable cohort of the societal pressures that have a job, they're trying to make it, but they don't understand what's happening with this fiat. I love this term, fiat radiation sickness, which is really came out of 2008, really excelled in 2020. People can't really vision what's happening here because we get this crack up boom and is the opposite of a crash. So in this backdrop, with yields falling, precious metals making all-time highs daily, oil lower, the consumer has ability to withstand the inflationary pressures shorter term here in Q4. This monthly, I guess you want to call it Goldilocks. Growth is still accelerating, not too much where the Fed won't cut interest rates, which the bond market continues to price in. And inflation has pulled back because of the energy, the oil cost, which is the largest component. There's a tailwind for longer term inflationary pressures, also pull back. So like this is a good setup continuously for these type of trades. The 10-year US yield down to could break 4% on a year, but look at that 2 year. This is really what's pricing in Fed rate cuts, breaking 3.5%. The US 2-year yield pricing that in. Bitcoin continues to kind of tread water here. 111, like I said yesterday, it broke its bullish trend at 114. Need to recapture that to get a momentum back to all-time highs. The biggest driver of the spot Bitcoin price daily, that's me, is those ETF inflows for the last couple of days have really pulled back. Going to need to get the momentum near. MicroStrategy, 79, 80 billion market cap in its Bitcoin holdings. It's bearish trend and continues to tread water around 300 a share. The second biggest contributor, owner, Bitcoin, the U.S. government now. Big seizure yesterday announced through this Chinese butchering scam over the internet. 127,000 Bitcoin seized. Now the U.S. government, $36 billion in Bitcoin holdings through its Fortitude seizures over the last few years. Silk Road, that one, a couple others. Into China and Asia, massive moves last night in Japan. Another all-time high for the Japanese Nikkei stock market, 1.76%. South Korea up big, 2.7%. Hong Kong up 1.84%. And China up 1.2%. Interesting interview I watched yesterday, and a market strategist that was opponing on the potential that Xi Xi Jinping would step down as CCP leadership potentially here at the end of this month. The CCP have their fourth plenary session. It's a CCP Central Planning Chinese government, what they're looking to do for the next 5 years in social, economic development, etc. Potentially, the Xi steps away as the CCC head, still Chinese president here at 72 years old. That would send a lot of shockwaves across markets, particularly on the geopolitical front that seems to be really rapidly evolving, Middle East, Russia, all that stuff. Yeah, if anything, the precious metal continues to get bid in that backdrop. Yesterday, stocks rebounded. 78% of stocks were up at least 1.5% in the US, and even that small cap IWM hit another all-time high. So we'll see what happens. Talked about yesterday how the move in volatility need to be sustained if we're going to get a risk-off sustained event. That's what I got for you today. Talk to you guys soon. Have a good one.